Hello guys, how are you? This is Shocks and this is ShocksCapital FX YouTube channel. Welcome back to the channel. If you are new to the channel, welcome. And we talk about smart money concept and institutional order flow trading here on the channel. So today we are here to talk about how to refine institutional entries, the way to enter. So what we want to do here in this video, what we want to explain is how to properly refine your institutional entries, how to get your points of interest from the higher time frame and dial down to the lower time frame to get a super tight entry and reduce your risk in doing so. So we are going to be talking about identifying valid order blocks from the higher time frame. Then we're also going to explain how to identify valid order blocks from lower time frames that are in sync with the higher time frame order blocks. We're also going to explain how to wait for a pattern to be confirmed. So there are various ways of getting entries when we talk about institutional entries. So what we are going to do is we are going to talk about how to actually wait for a confirmational entry. Then we are going to talk about two ways to get entries. There's the confirmed entry. There's the confirmed entry, something that looks like this. Then there is the risky entry that looks like this. So let's just go right into it. So first of all, from the higher time frame, we are looking at a market structure that looks more like this. So this is how the market is looking like from the higher time frame, and this is your order block in this area. This is how you are looking at it, and what you are looking at the lower time frame is a move that looks like this, right? So this is what you are looking for from the higher time frame, where we are having your structure being taken out, break of structure here. Then you also have a break of structure here and a retracement. So that's what you are looking at from the higher time frame, and this is your order block. And you're looking at price retracing back from here to the order block retest. So what we want to talk about is all to do with what is going to happen at this point in the thick and thin of things. So when you dial down to your lower time frame, right, you are going to find one or two things inside this higher time frame order block. So number one, you can be finding an order block that is inside the H4 order block. Then you can get what we call a risk entry. Just use a pending order and you are off like that. Or you can be actually looking for a consolidation that you can give a name to, or you can say Wyckoff consolidation or something of this nature. Then you can be looking at getting an entry like this. So this is what we are talking about, and this is how you are going to be looking at this, and this is how you are going to be trading. So with all that being said, let's go to charts and try to see how this looks like on charts. Then after we explain this, we will go then to explain what you will be looking at an order block that looks like this, that with in real time, right? So what we want to talk about here is this order block that you see in here. What do you see? Number one, we're looking at market structure, and with the way things are looking like, we have a break of structure right here. That's number one. Then we have that impulse move from here to here, meaning we have our top of the range here, then we have the low of the range at this point. So this is our range, and this is how you get like valid order blocks. So top and the low. So we have the high and the low of the range. Then after that, what are you looking at? You are looking at something that we call the premium zone. So we want to see where the premium lies. So the premium is just the upper 25% of the range. So that premium, you look for order blocks in that premium. That's why we didn't choose this one, this order block that you see in here. That's why we didn't choose that, and you chose that because that's the premium one. Then when you choose this order block, you look at it like this, you drag it and you mark it like that, and you are waiting for the move from the low of the zone back to the order block to be something that consolidates like that. You understand? Then you'll be looking at finding an entry inside the inside this order block. So number one, we're looking at two types of entries. So first of all, we start with the risk entry. So we are getting our entries all the way from the 5 minute from the 5 minute time frame, and what we are doing is number one, the risk entry. So I'm going to show you how to get the risk entry. So in short, the risk entry, you find an order block inside the H4 order block or inside the higher time frame order block, and you use that as your entry. Just wait for price to retest and you enter without any further confirmation or confluence, right? So from what you can see here, you zoom in the H4 order block. Then in that H4 order block, you should be able to find a valid M15 or M5 order block. So with how things are looking, this M5, as you can see, there is no order block that we can use that we can say this is a valid order block. So what do? We go to M15 to try to see things clearly. So if you go to M15, you are looking at an order block. The way you look for order blocks is the same no matter the time frame. So what we are doing here is we are going to look for an OB that is the potential or that is valid from the higher time frame. So as you can see, if we zoom in here, we can see that we have this order block being proclaimed, or this order block being so loud compared to other order blocks. Why am I saying that is loud? If you look at this, the other order blocks look like they have been mitigated. So this is big enough, and it produced a very good move that took out structure. Look at this structure was taken out here. Then you look at the next structure that was taken out. It was these lows right here. It was all because of this order block. This one is all mitigated. So we mark this OB and extend it in future. So we can just use a horizontal line like that. Then we mark it. Then what you are going to do entry wise is you are going to enter as soon as price touches the line. So this was the first retest of the order block from M15. So this would have been your entry, and your stop loss is going to go on top of the OB, which means your stop loss was going to go on top of here plus the spread. So you are going to be triggered in here, and price is going to consolidate in the OB like that, then move at last. So this is number one. This is how you use the risk entry. So if we have to represent this, it would look like this. So this would be your order block, right? This would be your order block on M5. This would be your order block on M5. So your entry is the low of the order block. This would be your entry, and the stop loss going. So you get triggered here. Then you just set your. This is more like a set and forget a strategy. You just enter, you set your stop loss, and you set your TP. Then that's it. You wait for price to move. If it moves, then you will be good to go. So the next thing we're going to do is the confirmed entry. The confirmed entry, there is a pattern that we are going to be looking for. And first of all, before we go any further, let me just lay it out for you how it looks like. So number one, we have an order block from the H4, something like that. So the pattern which we are looking at a pattern that looks like this. Number one, it has to miss the order block. It has to leave a high. Remember, we are doing sell examples. So if you want then to go and do buy, you're just flipping what we are saying here. So we have a high. This high has to be what? It has to be set just before retesting the order block. Then the next move has to break this high and retest the order block. So when this happens, what are you waiting for? You are waiting for a break of this sort of this low, something that looks like this. Then after this has happened, you are waiting for an order block retest that is responsible for this break of the low, this low here. You are looking for an order block in this area responsible for the break of this low here. So you are going to do something like this. So this is how a confirmed entry would look like. So this is what we call, this is a liquidity grab, number one. So we say liquidity grab here, right? Then after that, liquidity grab, price gets into the order block. Then when it gets into the order block, it has to come for what we call change of character or break of market structure. So this happens, this is the break of structure. Then when this happens, price has to retest this order block in this area. So this is the pattern you're looking for. So you are going to execute as soon as price retests back or retraces back to retest the order block on the lower time frame. So you can even delete the order block from the higher time frame and use this. So price just has to get into the order block. So this pattern can even be presented in an order block from the H4 like that. As in, sometimes it doesn't have to miss the order block. It can be presented like this. So either way, there are variations of the pattern. All patterns are working and all patterns do work. So you just find out what works for you and what works for your trading. So now we want to go to the H4. Remember, we showed you the risk entry, right? So we are going to the H4 and try to find an entry using the confirmed entry pattern method. But we want to get the same entry and we want to get the same trade. So you see, we can be having a same trade and we can be having different risk to reward ratios or different entries, but the trade will be the same. So this is what I want to show you, how these things can be different. So we can be using the what? We can be using the M15 or we can be using the M5. It depends on what works best for you. What works best for me is the M5, but I'm going to show you examples using all the time frame. So here we are. We have the order block here, right? Yeah, you see what we have. So number one, what do we have? We have to have what we call a liquidity grab. So this can be a liquidity grab. So if you are proficient enough and you can see these things clearly, and if you have seen it numerous times, you can also see that this is a liquidity grab that would have happened in this area. So that happens. What next? What are we looking for next? We are looking for a break of a market structure, and we are looking for a break of this one, a break of this low. Look what happened. It happened. Break of that low. And what order block are you looking at? You are not going to choose this order block for obvious reasons. You know, we talk about how to choose order blocks on this channel. So you are going to be choosing that as your order block. This is how you refine order blocks. So you are going to be having liquidity grab. You're going to be having liquidity grab. Why? Because liquidity or money rests above highs and lows. So those two highs have money on top of them, or have orders resting above them, or orders waiting to be executed. So that's what we call liquidity. When price shoots above a high, it's taking the orders that were placed on top of that high, meaning we are taking the money. That's liquidity grabbing. Why we are saying it's grabbing? It means we are just taking it so that we can turn and go into the other direction, and we are using it to execute some more orders. So your entry here would be at this point. So what happens is, what comes first is the break of structure or the change of character, which is this one. So this move that retraces back to the order block is what you are going to be using as your entry. So your entry is going to be this pin. That is going to be your entry, and the stop loss obviously is going to go above those highs, right? So that's what you are going to be doing, and you are going to go for minimum 1 in 3 risk to reward ratio. So if you see what we are doing here, you will be looking at something like this. So let's just see how this would look like. 1 in 3. Yeah, so 1 in 3. So this is how your trade will go. So you enter here, right? You enter there and you are going to be out here. You understand? So 1 in 3 easily like that. This is how. So let me tell you a little tip. When you want to be refining your entries like this, you have to use risk to reward ratio. Yes, obviously. So from the H4, the bigger the gap between the time frames that you are looking at, the better. You understand? So if you are looking at the H4 and the M5, we're saying you are going to get tighter entries, you are going to get better risk to reward ratios. If you are looking at H1 to M15, yes, it's good, but the gap isn't great. So if you are H4, M5, the gap is good, meaning the gap or the risk reward ratio is going to be better compared to H1 and M15. I hope you got that. So that's what we are doing. So these are the 2 ways you can be refining your entries, and you can be looking at your trades and trading institutional entries like that. So guys, I hope this was helpful to you. I hope to see you in the next video. Thank you. Trade what you see.